Stocks rising one day after Donald Trump was sworn in as the 47th president of the United States. Joining me now, we've got Bryan, Gradient Investments Senior Portfolio Manager. You tell investors to be careful with playing Trump trades. Walk us through that.
Yeah, for sure. Don't assume that just because something is potentially enacted or even enacted, how the stock market will react to that. And the classic example I give for this is energy. There's a lot of buzz around energy right now, right? Is that there's a national emergency for more production, that kind of thing, an executive order that came through. What I would say is that in 2016, during President Trump's first go around, there was a lot of buzz around energy there too. And what I would say is what was the worst performing sector during his presidency was energy. And the reason for that wasn't anything he had to do with, is because we suffered a global pandemic during that time. Secondarily, Mr. Biden, the president before or after Trump's first term, was considered pretty negative on energy. What was one of the best performing sectors during his tenure is energy sector. So you have to be careful in assuming that legislative or executive actions consider absolute positives or negatives on the stock market. That is why we always say just be cautious in making that linear adjustment and pivoting portfolios based upon those actions alone.
Certainly. And so all of these things in mind, what do you think will be the biggest themes that continue to play out over the course of the next 4 years based on what's been campaigned on?
Yeah, based on what's campaigned on is what's going to work regardless of political action. That's kind of where we try to look at these things. And so from our side, we think cybersecurity. We think that is going to be a case whether there's executive actions, whether there's tariffs. One of the things we know is that cybersecurity, and especially with AI as a continued deployment going forward, cybersecurity is going to be either number one or number two priority for investment enterprise tech professionals. So from that side, that's where we would be leaning towards and saying that's an idea we can get our hands around and saying we think this is just going to be bigger over a longer period of time. And the way we're choosing to play that is Palo Alto Networks. We think that company is in the catbird seat with regard to what people need to spend more on, and especially businesses need to spend more on. So those are the kinds of things we're going to look at from the thematic point of view, is cybersecurity, and then AI pivoting from horsepower to software is another component that we're looking at pretty aggressively here, in saying that software deployment and efficiencies created via AI technologies is probably the next wave of iterations. And right now we're investing in the incumbents in there, and that's Salesforce and Microsoft. We think both of those companies are really going to be heavily involved in deploying AI services to their clients in ways that add value to their businesses. And so those are the themes we're really playing from our perspective and saying, regardless of what happens during the Trump trades or the adjustments that are happening in the White House, these are things that are going to be secular growth profiles that people will continue to spend money on.
You mentioned something interesting sure, there's what people are spending money on, but then there's also what businesses are spending money on. Cybersecurity aside, where are the other areas that you anticipate that businesses will feel comfortable continuing to deploy capital, even as we've seen them go through their own cost adjustment or expense adjustments in the recent 2 years, as all of the conversations around the dreaded R word and recession have been floating around, and businesses have been trying to make sure that they skirt any impact to themselves?
Yeah, from our side, we really don't see recession as a base case scenario, certainly. Could it happen? Absolutely. We don't see it as a base case scenario. So from our side, it's where our business is going to continue to spend to add efficiency to their businesses. Because we also don't see, our base case scenario was more of a steady to slightly slowing GDP growth profile, especially if we get fiscal initiatives that are government efficiency, if you will, the Doge of government. If that actually entails, that's a hard argument for us to say we're going to have accelerating GDP, because it's difficult difficult to spend when the government is cutting back. So from that side, I think efficiency will be the bigger predominant of 2025 business spending, is how can I make myself still grow my revenue and still grow my earnings while being more efficient. So I think that from that side, it's whatever does bring that about. And so we're really looking at, from a company perspective, the recurring revenue stories, right? Is who gets money under just general circumstances and it kind of just keeps coming in. And those companies are companies like waste management. We think that people are going to continue to spend on waste management, right? At the end of the day, you have to get your garbage picked up. So those are recurring revenue stories that have pricing power, that they can raise their prices and really doesn't change their business a whole heck of a lot. The other one we're looking at that we like a lot are the payment networks. Again, we think the consumer is going to be relatively okay. As long as jobs hold up, we think consumers will continue to spend. We don't see the current set of debt levels as red line territory at this point right now that's going to stop spending. So if they're continuing to spend, who benefits from that? That's Visa, MasterCard, because they run the rails of consumer spending.
Right. Jeremy, thanks so much for taking the time breaking down some of these picks that we're going to be tracking over the course of the year. We appreciate it.
Thank you.